Hey, it's Jon Edwards, and you've just tuned into another episode of Edwards Wealth Management's Financial Insights. We're super thrilled to have you here today. And today we're going to roll up our sleeves and we're going to get into the nitty-gritty of year-end financial planning. So let's dive in. We're going to start talking about reflection and reviewing your budget. So let's take a moment to reflect. Look back at the financial goals that you may have set at the beginning of the year and see what may need a little tweak and what worked well. No need for a complex spreadsheet. Simply jot down items that you think you might be able to cut back on for your spending. Here's a time-saving tip. Utilize RightCapital. It's our financial planning tool. And one of the great things it does is analyze your spending. It categorizes it. And it provides insights to help make your budgeting a breeze. Find the link below and you can get started planning and budgeting with that. Next topic we're going to talk about is one of the things you want to ensure that you're doing at the end of the year is maximizing your retirement contributions and planning around taxes where that may make sense. So, retirement contributions. I know it sounds like a heavy topic, but I promise I'll keep it light. Check your retirement fund contributions and see if you might be able to provide a little extra love to those contributions. Definitely make sure you're getting the entire employer match because that's free money. And from there, contribute as much as you can to prepare for retirement and to reduce your current tax bill. And hey, have you ever heard of Roth 401ks? A lot of plans now have a Roth option. And if you aren't in a high tax bracket, this might be worth a look. It's a savvy way to mix things up. Also, if you are in one of those people that's in a lower tax bracket this year, for whatever reason, it's a good time to consider possibly doing a Roth conversion, paying the tax and then keeping it as a tax-free asset well into the future. Now on to taxes, the unavoidable certainty. This year, the tax brackets have all moved up a little bit, and that's a good thing due to inflation. It's always a good idea to be aware of these sort of changes as they can impact your financial strategies. Another good thing to do at this time of year is tax loss harvesting. It can also be a good strategy. So if you sell something for a loss, you do have to wait 31 days to buy it back, but you're allowed to buy something that's a little different right away. And here's a little heads up. This time of the year, if you own any mutual funds pay capital gain distributions. So always check your funds to make sure there's no hefty tax distributions that are going to be passed on to you. And if there are, you may want to sell out before the record date, and that's typically the first week of December. Now, for those of you who are over the age of 72, listen up. If you have a retirement account, you need to take your required minimum distribution, or RMD, before the end of the year. Why? Because there's a 50% penalty otherwise. And here's a little nugget of wisdom. It applies to inherited IRAs as well, regardless of what the owner's age is. So make sure to mark that on your calendar and don't forget to do that. Next topic we're diving into is estate planning and philanthropy. So let's tackle estate planning. It's kind of like adulting on a whole new level, right? But don't worry, I've got your back. Make sure your estate plans are up to date. Having a will, a trust, and a power of attorney is crucial to safeguard your family in case the unexpected happens to you. As we journey through life, thoughts of providing for our loved ones naturally come to the forefront. Crafting a solid plan is where having a competent attorney can really come in handy. They can help tailor your plan exactly you want it to be. Now on to philanthropy. It's not just for the elite. Consider ways that you can give back, whether it's volunteering your time or supporting a cause that you're passionate about. If you're looking for a tax break, writing a check or donating items before the year wraps up can really be beneficial. And here's a little nifty tip from my personal playbook. Whenever I go to drop items off at Goodwill, typically around this time of the year, I always take a quick photo. It makes tax time a breeze. But beyond the tax perks, there's something special about giving back. Keep it genuine, keep it personal. It's the kind of action that not only makes a difference, but also feels great in the process. Another thing you may want to consider is contributing to a 529 college savings plan. Some states give a tax break for this, and it's a really great way to set up your future generations. Additionally, this can also help you move some money out of your estate. Has your family grown this year? Have you bought a house or started a business? The insurance coverage you had at the start of the year may not be enough to meet the needs that you have now. It's a good idea to check to make sure that your life insurance adequately protects your family and that you have enough liability coverage on your home and car. And depending on what assets you have, it may even make sense to look into getting an umbrella liability policy. If you've declined any extra coverage, such as disability insurance through your employer, make sure that that still makes sense for you for this next year. Since we're in open enrollment season, this is a good time to check all that out. If you've decided to strike out on your own this year, you may need to get your own disability policy to protect you in the event that you're unable to continue working. Setting realistic financial goals. Now let's talk about goals, those dreams, those hopes and aspirations that we all have. The truth is, you can achieve anything you want, but there's a catch. Planning is required. So take a moment, grab a notebook, and let's jot down our goals for the upcoming year. Here's the catch. Let's make them realistic and achievable. Now here comes the time for your action. Turn those dreams into actionable steps. It's easy to dream big, but the magic really happens when we break these aspirations down into practical, doable tasks. So let's not just dream about our financial success, let's plan for it, step by step. Well, that's a wrap on today's financial deep dive. I'm wishing you all happy holidays and an incredible new year. Don't forget to hit subscribe if you want some more no-nonsense financial wisdom. Stay financially savvy, and I'll catch you in the next one.